Hello and welcome back to the show. Today we're talking with Brent Ford, owner of Benefit Wealth Partners, and we have been talking about the market. We've been talking paradigms, and I want to dive right back in because you've had some great articles, and you know the market's been on such an upswing now for a while. We were talking about that, and I hate to be Debbie Downer here, but can there be too much of a good thing?
Well, the market always happens in cycles, and you know we could be at the end of a cycle. We really don't know. I think it's important to understand that this is not going to happen forever. You know, the market generally will trend up, but there will be some points within the next 3 to 5 years, maybe the next 10 years, where we hit some dark times within the market. We have too much bad going on as far as our debt level in the United States, and you know some of the unwinding that's going to cause. You kind of see it now every time the Fed comes out and talks about interest rates going up, the market panics and sells off.
Very emotional.
Very emotional. Yep. So those are some of the culminations of all that. We haven't hit really the confluence of everything kind of working together to really retract the market, like what happened in 2008. We haven't been there yet. We've been close a couple of times, but we do have very nice long-term numbers. The point that I'm trying to make when I say that is if you are investing your retirement savings or your nest egg to just capitalize on the returns of the market, that's a long-term recipe for failure. Because we're going to have some upswings, we're going to have some downswings. What we need to do is we need to plan portfolios that are balanced to work in all different aspects of the market.
So you wrote another article that's on Forbes, great article as well. You posed this question: are returns the correct guiding metric for a portfolio? So, Brent, I'm going to ask you the question: are returns the correct guiding metric for a portfolio?
I don't think so. I think returns are important. We have to look at them. But the industry has done a lot of work in trying to make returns the sexiest part of investment. It's what sells. It's the sizzle. That's what people are dominated by. How much it made over the last X amount of years. I think the number that we have to be more cognizant about is what the risk level is, in a portfolio. So we measure risk using standard deviation. Pretty simple concept. Standard deviation you can find on any investment that exists. The higher that number, the more wobble your account is going to have. So I always compare it to like a wash machine that's out of balance. So if you ever had like the old wash machine that rattles around a lot,
banging all over the place.
Yeah, the more out of balance it is, the more wobble you have, the more likely that washing machine is going to do some damage. It might bust a pipe or hit a hole in your wall, whatever it happens to be, ruin the wash machine. So that is a portfolio with very high standard deviation. It's got there's not a lot of balance to it, so it's bouncing all over the place. What we want to try and glean out of a portfolio is we want to try and get it to a point where we have a nice balanced load, so it's not creating any havoc in your house. It's not keeping anybody up at night. That's what we want for a portfolio. So it's important to understand what the returns are. You need return. Return is what's going to finance the bills that you have.
Sure.
But we also have to be very aware of what risk level we're taking in order to get that return. So we focus a lot more on risk in our firm. We do a lot more risk management tactics than we do trying to beat the street, so to speak.
Do you feel that with the way the market's gone for the last 10 years, do you feel that people are maybe lost a fear or respect to the market? Or
probably, and rightfully so. Anybody could have made money in this market as long as you were participating in it. That's the way it seems, at least. I had a good friend of mine that he always used like a taxi cab driver. He traveled a lot, and he'd always use the taxi cab driver as his gauge of when was a great time to exit the market. So it seems kind of weird, right?
Yeah, I'm so curious where you're going here.
So he said that in all of his travels to all these different big cities, he'd hop in a cab, and the cab driver would always say, what do you do for a living? And he would be like, oh, I'm a financial advisor. And the cab driver would then go, oh, awesome. Yeah, I'm making 10, 11, 12% in my portfolio. That was always his gauge to say, yeah, this is a really good time to get the heck out of the market. And what that means is just rising tides are raising all ships. Not necessarily because you are better at investing than an advisor is, or that an app is or a robot is, but just generally things are trending up. The problem is that once those tides go away, that's where you have these significant drawdowns, and that's the part that people aren't always equipped to understand in a DIY portfolio. I think as advisors, our job is not to pick your mutual funds and stocks and bonds and whatever products that you have. I mean, that's a portion of it. But I think the biggest part, and I think it's going to be our biggest advantage for the industry and society as a whole kind of going forward, now, especially now that we've gotten to the point where apps are doing all this stuff for everybody, this robo-advising, segment of the population. Advisors are here to kind of heat check your behavioral health when it comes to your investments. So you're not making inappropriate decisions at the wrong times in the market. That's the part I think that we add tremendous value to somebody's overall retirement.
There is so much that goes into really preparing a portfolio and then managing a portfolio. And then there's one other thing that we were talking about off camera that involves taking money out of a portfolio in the right time. And we're going to talk about that right after the break with Brent. Make sure you come back for that. We'll be right back.